Are we finally seeing signs that our market might be leveling off? I think so. I'm Ron Milligan with Remax Select. Today, I am not coming to you from our office in the Pearl District. I am actually coming to you from my backyard. The reason for that is my agents and I just went through a grueling 30-plus hour, 3-day session of training on the latest real estate techniques and statistics and what's coming down the line. And I'm taking a mental health day, but that is not keeping me from giving you the latest real estate market statistics for the Portland metro area, both the Portland side and in Southwest Washington. So, kind of interesting. Remember about 3 weeks ago, I was saying, gosh, we have that first time that, or it was actually about four weeks ago, that first time that the supply of active listings decreased a little bit. And that was significant. We looked at that number and said, oh, this is kind of interesting, especially given the timing. This might be the first sign that things are starting to level off. Now we might be seeing, but at that time I said, it's just one data point. It doesn't indicate a trend. It's something that we're going to watch. Now we might be seeing a trend. If you remember correctly, the first part of this year, the number of active listings, the supply of active listings we had in the Portland metro area was less than what we had last year. So we had fewer active listings for buyers to choose from January, February, and into March of this year than we had last year. And in fact, that number went through April. So we had fewer listings this year than we had last year, and we hit an inflection point in April where the numbers started to shoot up this year. And we were seeing increases in the number of active listings by 100, 150, 200, 250, 300, 350, even at one point 400 more listings week after week after week, to the point where we had at one point more than 60% more active listings this year than we did at roughly the same time period last year. Now we're starting to see a shift a little bit. If you take a look at this chart, you can see that we started to level off. Over about the past 4 weeks, we've seen slight increases or slight decreases to the supply of active listings. And when we're comparing the number that we have right now, this 5454 number, to where we were last year at this time, that number was 3555. That's an increase of only 58% versus the 61% that we'd seen earlier. So it could be that that number is starting to drop off a little bit. Like I've been saying, I get the feeling that those folks who are planning to sell this year have already put their homes, the lion's share of them have already put their homes on the market, and that we're probably not going to see a lot of new listings hit the market outside of folks that need to for job transfers or, the typical things that compel people to move, marriage, divorce, a new kid on the way, that sort of stuff, and job transfers causes folks to move. So that may be what we're going to see for the balance of the year. Again, it's just the beginning of a trend. We'll watch it. We'll see if it holds true. On the other hand, on the other side of that is the buyer demand. It seems to be pretty steady. Looking at these numbers here, we had 738 last week. The week before, 764. This week it was 736. It's right in line with where we've been really over the last 10 weeks. This might be kind of our new normal. Last year at this time, of course, it was a much hotter market, much busier year. That number was 973, but that number is down from where it had been previous weeks, closer to 1,000 or typically above 1,000. So this is really starting to look like more of our normal market trend for the Portland metro area, where towards the end of summer we start to cool off a little bit. We don't get a lot of new listings, get a nice bump of business once we hit September after Labor Day. I suspect that we're going to see a nice flurry of activity that will close in October, and then probably through the balance of the winter, kind of a suppressed amount of buyer demand will continue to chip away at that volume of active listings that we've had. I suspect that's what we're going to have. What's going to happen next spring, I just don't know. I think a lot of that's going to depend on interest rates. So the number of homes that did sell, we talked about this, kind of a suppressed number compared to where we were last year. 648, it's up versus where we were the last couple of weeks, which were really weak showings for the number of closings. But when I'm looking at the numbers over the last 8 weeks here, you can see that it's kind of in line with where we've been. When I looked at my notes from last year, roughly the same time period last year, that number was 888. So certainly a lot more activity last year. New active listings, supporting kind of my thought about, those folks who needed to list and sell this year. The lion's share have already put their homes on the market. That number was down about 18% where it was the previous week. So far fewer active listings this week versus the previous week there. Price reductions were down from the previous week, 712 versus 783 the previous week. And the number of price reductions of $15,000 or more, which are more legitimate, more realistic, more significant price reductions, that was down as well. It was 388 homes that did price reductions of 15,000 or more, and of our total number of active listings, that represents about 7.1% of the homes that are on the market had these price reductions. Bumpable buyers are down a little bit, 119 to 101 this last week. Days on market did go up significantly. We're at 25 days on market on average. The median came in at 14 versus last year's 5. The average 25 versus last year's 17 days on market. The average sale price for roughly the same time period last year versus this year was up higher than it had been previously. That number was 623,808 versus last year's number 581,297. And that is about a 7.3% increase. The median was 564,900 versus 522. That's an 8.2% increase this year versus last year. And that's up from where we saw last week. If you remember last week, the numbers were like in the 4s and 5s. So it is kind of good to see that number, showing a little more, a little higher difference from last year to this year. The average sale price as a percentage of the original asking price came in at 96.92, so approximately 97%. So whatever those folks originally listed their home at, on average, homes sold for 97% of the original asking price. And then the other thing that I started tracking were short sales and bank-owned properties. Bank-owned came in at 24 this last week of the active listings, and short sales came in at 16. That's a total of 40 distressed properties that are on the active market of the 5,454 listings that are on the market. So it's still an incredibly small percentage and well below what we see in a normal market. More may be coming, but I'm actually not seeing that yet, at least not in the notice of defaults that go out. The canceled and expired listing, something I also started watching last week. That was 180 and 39, so 180 canceled listings, 39 expireds, and then this week that number was down to 128 and 45. So what does this mean? Is this good for buyers? Is this good for sellers? I feel like it might be good for sellers. It might give them a little more confidence. If there's fewer homes for them to compete with, they may find themselves in a better position. But I also don't feel like it's bad for buyers yet, because there are a lot of sellers out there and some agents who don't realize that what we're experiencing now still isn't terrible. What a normal listing experience for a seller might be, as long as they price the property properly and they prep the home and they take some good pictures and they're giving a good online presence and the agent is advertising the heck out of it. That first weekend, you may only get 3 or 4 showings. And then going forward, maybe 1 to 3 showings every week after that. And the property may spend 30 to 40 days on the market before it actually gets an offer. That's a normal experience on the market. We've had such a strong seller's market for so many years now that a lot of folks, agents, or maybe even agents that are new and they don't have any experience with the normal market, or sellers have just forgotten what it was the last time they bought or sold. That was a normal experience. You'd hit the market, you wouldn't get overwhelmed with showings, you wouldn't have an offer within minutes, and we would have a normal transaction. You might just get that one offer, you'd negotiate a little bit, try to get that number up as much as you can. Again, if you listed your home and you ended up selling at 98% of your asking price, your original asking price, that wasn't bad. And to sell in, 3 to 4 to 5 weeks sounds kind of normal. It was kind of what we expected. So there's a lot of folks that maybe don't realize that yet, or agents that hadn't experienced that sort of market and don't understand that that sort of market's a normal market. They may be a little desperate. So when buyers come in with a low offer, and maybe the seller's been drinking the Kool-Aid about how this is 2008 all over again, and here comes this low offer, and we want, our closing costs covered, and we want under asking price, way under asking price, and we're going to do all of our inspections. All the contingencies are on the table again, and when we do our home inspection and we find something wrong, boy, those sellers are going to have to pay for that or do those repairs prior to close. Buyers those possibilities are still out there for buyers. And informed sellers, realizing what's going on, just keeping an eye on the inventory, what else your competition is doing. As long as you're in the know and you're making sure that you and your agent are informed about the market, you're not going to fare too poorly. Still not a terrible market, especially when we compare our current numbers, not to the white hot market of last year, but to markets that we considered to be closer to normal, 2015, 16, 17, 18, even though those markets were still seller's advantage markets. Our numbers this year aren't anywhere, they're less than what we were experiencing in those markets. So that's what I've got for you this week. I hope you found this informative. As always, I would love it if you give me a thumbs up, and if you would subscribe to the channel and also share it with someone who you think might find this information helpful. I always appreciate it, and your comments are always welcome. All right, we'll see you next week.